Want to build wealth and protect your assets? You need a solid financial game plan. A holding company can be a powerful tool in your financial arsenal. It's like a protective fortress for your investments and businesses. Think of a holding company as a parent company. It doesn't produce goods or services itself. Instead, it owns assets. These assets can be shares of other companies, real estate, or intellectual property. Holding companies provide a layer of protection and offer tax advantages. They're especially useful for entrepreneurs, investors, and anyone looking to grow their wealth strategically. In the following sections, we'll break down the ins and outs of holding companies. You'll learn how they work and why they might be the right move for you. A holding company is a separate legal entity, which means it operates independently from the personal finances of its owners. This distinction is crucial because it ensures that your personal finances and other business ventures remain unaffected by the holding company's activities. This separation is key to understanding the benefits of a holding company. Here's how it works in more detail. Ownership. The holding company owns assets like shares in other companies, real estate, or intellectual property. Control. By owning a majority of shares, the holding company can influence and control the operations of those subsidiary businesses. Liability. Because it's a separate entity, the holding company's liabilities are separate from your personal liabilities, providing a layer of protection. Imagine you own a restaurant and a clothing store. These businesses can be managed under one umbrella. You could create a holding company to own the majority of shares in both businesses, streamlining management and operations. This structure provides a safety net, ensuring that risks are managed effectively. If one business faces legal or financial trouble, it won't directly impact the other business or your personal assets, offering peace of mind and stability. Asset protection is a major advantage of holding companies. Remember, the holding company is a separate legal entity. This separation creates a barrier between your personal assets and the liabilities of your operating businesses. Let's say you're sued personally. Creditors cannot easily go after the assets owned by the holding company. They are protected because they belong to a different legal entity. This protection extends to lawsuits against your operating businesses. If one of your subsidiaries is sued, the assets of the holding company and your other subsidiaries are generally shielded. This structure provides peace of mind. You can focus on growing your businesses knowing your hard-earned assets have an extra layer of protection. Section 4. Tax advantages and financial efficiency. In this section, we will explore how holding companies can be a powerful tool for optimizing your financial strategy. Holding companies aren't just about protection, they can also offer significant tax advantages. These benefits can make a substantial difference in your overall financial health. These advantages vary depending on your location and specific circumstances, so it's crucial to consult with a tax professional. They can provide tailored advice to maximize your benefits. Here are some potential tax benefits that you might be able to leverage through a holding company structure. Dividends received by the holding company from its subsidiaries may be taxed at a lower rate than if they were paid directly to you. This can result in significant tax savings. When selling shares of a subsidiary, the holding company may benefit from lower capital gains tax rates. This can enhance your investment returns. Holding companies can simplify financial reporting by consolidating the financial statements of their subsidiaries. This makes it easier to manage and analyze your financial data. Remember, tax laws are complex and ever-changing. Staying updated is crucial. It's essential to work with a qualified tax advisor to develop a tax strategy that aligns with your specific situation. Their expertise can help you navigate the complexities and ensure compliance. Section 5. Taking the leap setting up your holding company. Setting up a holding company is a significant decision that requires careful planning and legal guidance. It can provide numerous benefits, such as asset protection, tax advantages, and streamlined management of multiple businesses. Here are the general steps involved in setting up your holding company. First, talk to an attorney and accountant specializing in corporate structuring and taxation. Their expertise will help you navigate the complexities of the process. The location where you incorporate your holding company can significantly impact its legal and tax treatment. Choose a jurisdiction that aligns with your business goals. Select a unique and appropriate name for your holding company and register it with the appropriate authorities to ensure compliance. Create detailed articles of incorporation and bylaws outlining the purpose, structure, and operational guidelines of your holding company. Issue shares of the holding company to yourself or other stakeholders, establishing ownership and control. Once your holding company is established, you can begin transferring assets or shares of your businesses into it. This step consolidates your holdings under one entity. Remember, this process requires careful documentation and legal oversight to ensure a smooth transition and compliance with all regulations.